All right, welcome everybody. Thanks for joining us today for our webinar to discuss the COVID-19 impact on the mobile secondary market. My name is Melissa Geringer. I oversee communications for bstock and will be serving as moderator for today's discussion. As we get into the webinar, please feel free to use the portal on your screen to send in questions via the Q&A tab on your toolbar. We'll plan to do a Q&A at the end of the presentation. We're also going to be doing 2 polls within the webinar to help drive the conversation, so thanks in advance for your participation in that. The polls are going to pop up on your screen and they'll be completely anonymous. So with that, I'd like to welcome our host, Joe Doobie. Joe works with some of our largest mobile sellers and buyers, providing them data and insights in order to optimize the experience across our network of mobile marketplaces. I'll go ahead and hand it over to you, Joe.
Awesome. Thanks, Melissa. Appreciate the intro and looking forward to diving into all of the data that we have prepared for everyone today. Welcome to everyone who's joining. Welcome back to those of you who have joined in previous webinars where we've reviewed. A couple of weeks ago, we went over the iPhone 11 impact to the secondary market. So do stay plugged in, follow us on LinkedIn, and be sure to tune into future episodes as well. I'm dialing in here from my apartment in Boston. This is week 5 quarantine for me, so I hope everyone out there is safe and secure and properly socially distanced from everyone else. So with that, let's dive in. We'll talk a little bit about this current landscape, what we're dealing with. I'm going to take a look back over the past couple of weeks and months and show you what we've seen on the pricing side and volume and the activity in the auctions that we run. First, I'm going to just give you a little background on why bstock has a unique view into this data and something that you may not be able to find elsewhere. And a lot of that has to do with the volume that runs through our network. So we run private marketplaces for very the largest carriers in the United States. We have sites for both AT&T and T-Mobile. We run sites for some of the carriers up in Canada, manufacturers directly, and we also run sites for retailers and wholesalers and processors. So there's just a ton of volume moving through our network at any one time. So we have a unique perspective into the data around the pricing and volumes in the mobile secondary market. So we'll talk a little bit about this current landscape, but before we do that, I'd love to just launch the first poll here, Melissa, and get a sense from the audience of how they've interacted with bstock in the past. So here, we're just wondering, have you purchased inventory from bstock Supply, which is our only multi-seller marketplace, is more of a small, medium business solution? Have you purchased from one of the private marketplaces like the AT&T, T-Mobile site, the GameStop site, Select Mobile, which is Samsung? Have you sold before on bstock Supply? Are you one of our retail or partners who's selling on a private marketplace, or have you not purchased anything through bstock at all? So it looks like all the answers are coming in now. Majority on the call as of what I'm looking at now have purchased from one or more of bstock's private marketplaces, with about 20% of you out there having not purchased or sold inventory through the bstock network at all. So welcome to everyone who's new, and welcome back to those of you who we know well. So we can end that poll. So what are we dealing with in the current landscape? So obviously, there's a ton of store closures out there, right? Everyone in the US at this point is pretty much shut down except for essential businesses. So that impacted not only the carrier stores, but Apple stores as well. I've seen in the past couple of weeks some of those stores come back online, but that retail footprint out there of people going out and shopping and popping into stores is pretty much zero. So for the most part, those retail outlets are all shut down, not seeing any real traffic. In addition to those impacts to the retail storefronts, we're also seeing that reduced travel impacting freight. So a lot of those shipments that are going across the country or across the globe via FedEx or UPS or whatever service it may be, they actually are in the bellies of a lot of the commercial flights that you and I are taking to travel as well. So that's something that's really impacting the ability to book a lot of freight transactions. Is there's just so much fewer flights out there moving back and forth. So we're seeing some freight stack up in terminals. There's other changes that are being made on the carrier side. They're not requiring signatures for some of those deliveries that may have required that before, trying to keep people at the proper distance and not have too much contact. Obviously, this is sort of fluid, right? We're seeing changes week to week here on border closures. But most goods are still moving across country lines. I know there's been some exceptions to this, and it is ever changing. Some of our buyers in the UAE have had some difficulties getting product in and out of that area. And then finally, here on the last bullet point on this slide is around the Apple production. So we saw that production in China really back online a lot faster than expected. Obviously, yesterday was sort of a surprise, and not all of us were expecting it to happen. But the iPhone SE, the second generation of that very affordable $399 device, that announcement came out yesterday from Apple, and that's going to be shipping before the end of the month. So really compelling value there for customers to get a device that has a A13 chip in it, the same chip as the iPhone 11 Pro, in a device that starts off $600 below that $999 price point. So we'll talk more about how that will impact the landscape and the secondary market as a whole. But before we do that, let's first talk about the mobile secondary market reaction. So with this pandemic and with all of that current landscape that we just talked about, how has that specifically impacted our business, that secondary mobile market? Obviously, volumes fluctuated tremendously. No surprise that a lot of the devices that end up in the secondary market come via returns and trade-ins at physical retail locations. So we're really seeing volume come down. We'll talk more specifically about how much and where we project that going forward. But clearly there's a lot less volume out there in the marketplace than there would be in a typical mid-April. We're also seeing some increased demand. I mean, this was very evident in the early to mid-March timeframe, where buyers were really putting a premium on volume. And we saw a lot of competition of trying to secure as much inventory as possible, with the thought there that buyers knew that decreases in volume were on the way. There was a pricing drop and rebound for grade D. We'll get into a little bit more specifics there. A lot of that had to do with the uncertainty in Hong Kong, and it had to do with what we saw out of those border closures in late January, early February. And that also led to some atypical depreciation for those grade A or B devices. So those are the newer devices that are more retail ready and typically will stay here in the United States. So that Hong Kong border closure I referenced just a minute ago, there was a lot of uncertainty there, and that was at the end of January, early February, where what was going to happen to the Hong Kong border. Obviously, at this point, the coronavirus was, we thought, very much isolated to China, and there were threats of the border closing. I know at one point in early February, it was closed. Almost all but 4 closures were closed. 4 crossings were closed, excuse me. And what that did immediately was bring down the price of those Degrade devices. So this is inventory that has cracked screens or really scuffed up and requires a lot of love and care before it ends up back in the hands of the end consumer. This inventory typically goes to Hong Kong, and with that threat of the closure of the border into mainland China, we saw those prices come way down. But it really recovered and turned around, and by the end of February, early March, we actually saw those prices back up to near where they were in January. So this was very much a temporary reaction by the market to the potential of having a very difficult time getting inventory in and out of Hong Kong and into China. But we've seen that come back, and pricing sort of is now at this point back where we would expect it to be. So A and B pricing behavior. This is the product that is retail ready. It may be, very minimal cosmetic damage, but be fully functional and ready for the next consumer. The typical depreciation curve for these devices is seen in that dotted line, right? It should be pretty gradual, step-by-step depreciation. This is a composite view of top Apple and Samsung models for those top grades. And the interesting thing to point out here is that increase we see towards the end of February in that very flat line from mid-February to mid-March. So these are depreciating assets, right? This is used electronics. They're not getting more valuable. As time goes on, the value decreases. But that really steady flat line and that increase we saw is a result of buyers anticipating the drop in volume, placing a premium on that inventory that they can purchase and secure now, and defying that traditional typical depreciation curve. So those devices are really holding steady, and we'll take a look specifically at the model level in this next slide. So there's a ton of data here on this top model pricing performance slide. What you're looking at, I'll explain first how these graphs work, and then we'll look at those specific impacts that we're seeing across various generations. What we're looking at on the y-axis here, you're seeing a percentage. All of the pricing of these devices at each grade is being indexed at 100% of what it was selling at the first week in January of this year. So the A grade is the blue line, the B grade is the orange line, C is gray, and D is represented by that yellow line. So let's take a look at that iPhone 11 example in the top left. What we're seeing there is a very exaggerated drop in the D grade inventory. So that's exactly what we were talking about previously around the concerns of the Hong Kong border closure. Those prices for D grade inventory went from 100%, meaning what they were selling for in January, down to 60% of what they were selling for. But since then, we've seen it climb back up, and it's now right around 85% of the price it was selling for in January. And that 10 to 15% depreciation over a 3-4 month period is really what we'd expect. But another thing to point out with the iPhone 11 is that incredibly steady line for A, B, and C grade devices. You'll notice they're right there along the 100% line, and they didn't really decrease in value for the first three months or so of the year until right around the end of March. And my hypothesis there is that a lot of these devices, these are newer phones, it's the current Apple model, they're in fully functional A, B, C grade. They may need a little love, but they're pretty much retail ready, expensive phones on the secondary market. I think a lot of that was staying domestic in the US, and there really wasn't an impact here until that mid-March timeframe when every state started to take this very seriously and really shut things down. An interesting sort of juxtaposition to the iPhone 11 is what we see in the iPhone 7. So this is a more mature device. This is now 3+ years old, and in this device, what we're seeing is a much steadier depreciation curve. It bounces around a little bit. There's some noise in there, but for the most part, across all grades and for the iPhone 7, it's a steady march downwards from where it was selling in January to the 80 to 90% range here in the first part of April. So as phones mature, they're less valuable. The depreciation is more steady and predictable. That's something that we see across the board. You know, as those older devices continue to sell and do well in the secondary market, they are much more predictable in their price. Couple more things to point out on this slide. There's just so much data here to take in before we move on is taking a look at the iPhone XR and the 8 Plus there on the bottom. The note here, you'll see that drop in Degrade, just like the iPhone 11. It's not quite as pronounced. But what's really interesting to me is that sort of steady increase from mid to early February for about a month. The prices were going up. So it's very rare that the pricing for these devices is increasing week over week over week. Like I said, these are depreciating used electronics. We all know it well. So it's really of particular interest to me in a rare sight to really see pricing increase week over week. And that's exactly what we saw in that about a month period from mid-February through mid-March. So in addition to the pricing metrics, we really have a view into the overall health of the marketplaces that we run. How is supply matching demand? Who's out there on the buyer side? Are they actively participating? Have they gone away? Are they no longer bidding or buying? And that's something we monitor closely because we want to make sure, you know, there's a home for all this inventory that's being posted. And, you know, if there are signs of that slowing down, I want to really understand why. You know, why are you no longer participating in sourcing inventory directly from these carriers, manufacturers, or retailers? So here on the left, we're looking at the unique buyers that participate in our mobile auctions each week. It bounces around a little bit. That's completely normal depending on the week and the type of inventory that's posted. But you will see that it did peak in early to mid-February, and it's been on a bit of a downward trajectory since then. Like I said, it bounces around week to week, but that last week in March was actually the lowest point we've seen this year for the number of unique buyers. So what does that mean? I think, and we'll get a sense of this from the audience later in the presentation on our second poll, but I think a lot of the smaller businesses that were participating in earlier in the year may not have been able to sustain some of the closures and shutdowns due to the COVID crisis. So I know a lot of the facilities that I'm talking with are operating at about 50%. You know, obviously attendance is really, really tough for those facilities that are relying on labor that maybe has to stay home or you know, be home with their school-aged children who are no longer going to school. So ton of hardship out there, and it makes sense given the what's going on. But I think it's interesting to see those unique buyers has come down a little bit in recent weeks. On the right, what we're looking at are bidders per auction. This is one of my favorite metrics to track because it's showing me how many bidders are participating in every single auction lot on average. So we want there to be, you know, some competition there. It's healthy for the marketplace for these products to be desired by multiple buyers. If that's not the case and we see lots going unsold, or we see lots getting a single bid by one bidder, that's not a good sign for the overall marketplace. So it's something that really I track closely. And what we saw is that those bidders per auctions that was the most competitive in early March. And that lines up with all the other data that we've been looking at to say buyers knew that volume crunches were coming. They came online. More bidders were participating in every auction in early March. They wanted to get their hands on some inventory where they had the chance. And since that point, it's come down a bit, I think, as more businesses have felt the crunch and have had to be shut down or put on pause for a little bit. So we are heading towards the end of the presentation, but there are some key takeaways here that we've put together for our quarterly takeaways. We publish this every quarter for all of our sellers to take a look at. This is something that we publish on the blog and on LinkedIn. So do follow us there if you want to get this data more regularly. What we're seeing here on the far left, that 2.5%, that's the average monthly depreciation for these top Apple and Samsung models that we're tracking. So each month on average in Q1, they depreciated by 2.5%. So even though we're in very odd times here in unprecedented impact to the economy, we've still seen depreciation really at a historical average for a non-event time. The most volatile times in the mobile secondary market are typically around an iPhone event in the fall. So it's very typical in non-event times in Q1 for those top devices from Apple and Samsung to depreciate at 2.5 points per month. The next number here to discuss is that 12.3%. So that's the average gap in ASPs between condition grades for Apple devices. So what's the average gap between A and B, B and C, C and D? It came in at about 12.5% this quarter. And that's something that has grown since Q4. So the Q4 number was around 10.5. So that lines up with all the other data that we've been looking at to show you that while overall depreciation in aggregate has been about where we expect it, there's been a bigger gap between conditions. So we've seen A and B outperform the historical average. We've seen Degrade devices really get hammered, particularly around that Hong Kong border closure, but then rebound. So on average, that gap between condition grades on Apple products grew a little bit since Q4 and it is at 12.3%. For Samsung devices, that number's higher. It always is. There's just more and higher costs for repair when it comes to Samsung devices. The supply chain for the parts and labor related with Samsung is just higher. That's right about in line with what we see each quarter, a gap of around 23.5% between condition grades. It's even more pronounced on the gap between a C and a D, just because the cost to repair those Samsung devices is more significant. In terms of top sellers across the network, this is really no surprise. The iPhone 8 Plus was the number one on the Apple side, with the iPhone 8 and iPhone 10 in second and third. And that's exactly what we'd expect for the N-2, those 2-year-old devices, to be leading the way on the secondary market. Those are typically the devices that are being traded in back to their carriers when people trade up to the latest device. We have in recent years seen that, seen people holding on to their devices for longer periods. But in Q1, those 8 Plus, 8, and 10 were the top sellers across the bstock platform. On the Samsung side, they did have their latest release of the S device this quarter. It went through with a little bit less fanfare than they would have liked, given that Mobile World Congress was canceled in Barcelona, an event we were very much looking forward to being at and meeting with a lot of you and our partners. But what we saw for Samsung was the S10 Plus, the Note 9, and the S8 Active were the top 3 models being sold across the bstock network. So before we dive into these projections, talk a little bit about where we see things heading over the next couple of weeks and months, I'd love to queue up the second poll, Melissa, if we can get that going, and just get a sense from the audience who's logged in today how the COVID-19 crisis has impacted your business. So have you seen no impact? Are you seeing sales increase? Are you seeing that decline of around 25%, maybe up to 50%, greater than 50%, or are you completely shut down? So we'll give everyone a minute there to respond to that poll that should have popped up on their screens. Cool, looks like we've got just about half of the people have voted at this point. We'll give it a couple more seconds before I give you a readout here. Interesting results. So what we're seeing here from those of you logged in and voted today is that around 30% have had no impact or increasing sales. So awesome. Glad to see that people are still out there able to conduct business and aren't facing those serious declines seen elsewhere. Around 27% are seeing that decline of up to 25%. 18% of people are seeing a decline of up to 50%. And then a longer tail there at the end of around 25% are seeing that greater than 50% or completely shut down. So I'll end that poll, dive into the projections, and then open it up for some Q&A. So where do we see volume going? When I looked back at March compared to January, we moved approximately 67% of January's volume. So we were about 2/3 of where we were at the beginning of the year. When I looked back at prior years, that number was close to 100%. So we're really down 1/3 from where we should be. I imagine that we haven't yet hit the floor, and we see volumes to continue to come down. We expect them to continue to fall until we get to about 50% of total volume that would be expected in the end of April any given year. No surprise that the shift to e-commerce is going to be accelerated. So this has been happening for 10, 20 years as Amazon slowly takes over the world. But the consumer behavior here of relying more on online channels and less on going to the brick and mortar, I think that's only going to be accelerated. So if you are heavily reliant on a physical retail footprint to move your inventory, I think now is a better time than ever. And I'm getting a Microsoft Auto update. Hopefully that didn't mess things up. The shift to e-commerce, I mean, now is the best time than ever to make sure you have your online channel set up, whether that be on Amazon, eBay, or some of the more mobile specific marketplaces, direct to consumer like a Swappa or a Back Market. The last point to talk about here, and it will be interesting to get some feedback from the audience too, if there's any questions on this, but the Apple release yesterday, as I mentioned earlier in the presentation, that was a bit of a surprise for me. I wasn't sure that they were going to go through with the release, given that all the Apple stores are still closed. I know this was something that was supposed to be happening in the mid to late March timeframe, was pushed back, was unclear. I mean, there were some projections out there that it may be pushed to the fall release and rolled into their standard upgrade cycle, but came out yesterday. It will be shipping through the end of the month. So a lot of people are very excited about this device. it packs a lot of power for a $399 price point. I mean, that chip in there, the A13, is no joke. What we expect to happen in terms of the impact of the secondary market is pricing overall to come down, just given that low entry price point for a device that has pretty respectable specs. With the most significant impact hitting the 8 and 8 plus. Those are the value devices out there today, and I think those will be very much impacted the greatest by the release of this new second generation iPhone SE. So with that, let's Melissa, open it up for Q&A and let me know what questions there are.
Yeah, great. Thanks so much, Joe. And we did have a few questions come in. Thanks to those who submitted. And of course, if you do have a question, you can submit it via the Q&A tab on that toolbar there at the bottom. So first question, do you think the destock atypical drop is due to most repairs being done in Asia, so no one could get those repaired?
Yeah, I mean, that's exactly right. So we see a lot of that Degrade product, the stuff that really needs some serious refurbishment and repair. A lot of that ends up heading into China through Hong Kong. So that's exactly right of why we saw that price come way down when there was a lot of uncertainty around the border between Hong Kong and China. But then it's since recovered as that strain has eased.
Great, thank you. Next question. So what makes you believe, or can you elaborate on why you think the price of the iPhone 8 and 8 Plus will be most impacted by the iPhone SE release?
Yeah, absolutely. So that's the device that right now is that sort of value device out there for the consumer, where it still has some of the older features like the Touch ID. It doesn't have as many, the cameras aren't as advanced. It still can perform all the everyday tasks that a non-power user needs. So it's very much that value phone in the market today, and that's what's going to take the place of that is the SE. It's retailing new at $400. It's a big improvement in terms of the processing speeds, but it also doesn't have any of the extras or extremely new features that a power user may want, like multiple cameras.
Great, thank you. Next question, I'm fairly new to bstock. Where can I find overall education on the market as far as pricing and everything else goes?
Sure. Well, you're starting off on the right foot by tuning into the webinar series here. So, I mean, this is a look at data that, you never would have access to just as a regular, we don't post this stuff normally. But the best way to really be in tune to the market is to log into the marketplaces and create an account. If you're looking to buy used phones, there's no better place than the bstock network. You're buying directly from the source. There's no middleman here where there's no, you're not paying a premium for someone else to touch the device first. So the best way to really understand pricing in the market is to create an account and watch those auctions close and participate.
Great. Next question. What is the second largest Degrade market when Hong Kong shut down?
So that's a good question. I mean, I think we saw a lot more of the Degrade stuff stay domestic in the US. We also see a lot of that product more recently going both to South America and into Europe. I mentioned Dubai earlier on the call. That's another big hub that we've seen grow over the past several years. But a lot of the Dubai buyers are only interested in that top grade stuff. So that's not yet where we see a lot of the lower Degrade product headed. So I think a lot more stayed in the US. I think went to other parts of Asia as well. But then also into the newer markets I guess more on the, not newer in general, but newer in the mobile secondary market into Europe.
Great. Next question was, how will the migration to 5G impact the secondary market, and when should we see that impact?
Yeah, that's a good question. Obviously, 5G is in the news a lot. There's not a ton of 5G compatible phones out there yet. I know the latest Samsung phones are. I mean, the current Apple iPhones are not 5G ready. So the biggest impact that I see in the secondary market is a real influx of trade-ins, and when 5G phones really become available and 5G networks are more nationwide. So that's going to be a very compelling point for buyers and consumers to upgrade, because it's going to be such a significant change in the speed that they can get on their devices. So I think it will really open up a lot of volume to the secondary market and be a reason for people to trade in devices, meaning inventory is going to increase. But I also think it will negatively impact pricing, because that means those devices won't be able to function on the new 5G networks that are getting built out.
All right, and then going back to some of the slides you presented earlier regarding the spike in iPhone 8, 8 Plus, and XR, the question was that spike due to the lack of inventory of the iPhone X during that time, or because of the cost delta?
So I think it was the lack of inventory overall that was forecasted by buyers. So a lot of people were wanting to snatch up as much volume as they could, and those are devices that are sort of in the middle of the road. They're not the newest, most expensive models, and they're not that old. So I think they're in a sweet spot in terms of getting them back into the hands of a end consumer, where they can offer significant value, but still, function in all the ways that consumers are looking for.
Okay, thank you. We'll go through a few more questions here. We're getting a lot of great ones coming in, so thank you. Next one, how does bstock validate or audit the thousands of buyers on your network, and how does that impact strong ASPs?
Yeah, so every buyer that registers on a marketplace is reviewed by our customer service team. It's an all business network, so no consumers can purchase on the bstock platform. And we collect business data from you, as well as a reseller certificate, to ensure that there's no sales tax implications in those transactions. And then other marketplaces, specific marketplaces, may have other specific requirements. There's a handful of R2 only marketplaces or R2 only categories of inventory. So some additional certifications will be collected where that's applicable.
Great, and this question's interesting. Can you kind of give your thoughts on who the winners and losers in the secondary market have been during this coronavirus crisis?
Yeah, I mean, I think, to my point earlier, some of the winners are those that have robust channels online, direct to consumer, right? Unfortunately, I think the losers were those that relied on a retail footprint. And if you're stuck with inventory and there's no people coming into your storefront, that's going to be a problem. But if you have a robust sales channel online, whether that be on a marketplace, through your own site, or in other geographic locations, I think that those are the real winners here, especially if you have exposure into multiple geographies, because that's when you can really get smart around where you're selling your inventory, given a specific price.
Great. And then we'll take a couple more here. So this next one is asking, do you think online trade-in will replace offline in-store trade-in?
Certainly has, these past couple weeks. I do think, like I said, a lot of these new behaviors will stick around. No doubt that in-store trade-ins will continue in the future once things open back up, but I do think a lot of the online trades, whether that be directly with Apple or your carrier. I mean, it's all set up, right? Everyone can process those. It's easy enough to drop your old phone in the mail after you get your new one. So, yeah, I do think that the online trades will be a larger share of the overall picture going forward.
Great. And final question, we're going to bring it back to 5G. Once all networks go to 5G, will the old phones become obsolete, or are they still going to work?
No, they'll still work. They just won't be able to take advantage of those new 5G speeds. So it definitely won't drop value to zero on those devices, but there certainly will be a premium for 5G capable devices. But I anticipate non 5G devices will be around for several more years, given the current Apple model still isn't 5G ready.
Got it. And I did have one other question come in. Can you share your thoughts about Apple Watches as well?
Sure. So that's interesting. That's a category that we actually saw there be sustained interest in and demand for, even when some of those Degrade phones, like when some of the Hong Kong buyers were taking a step back from phones in late January, early February, we saw them supplement some of their purchases with devices like iPads and Apple Watches. So I think demand for those devices is still strong, and buyers see that as a way to really diversify their buying portfolio and spread the wealth a little bit. So those perform really well in the secondary market, and I expect them to continue to do so.
Got it. Okay, and we had one other question that came in, which I'd like you to answer too. It's, in your view, is the secondary market right now supply or demand restricted?
I mean, given most of the pricing increases that we've seen in February and March, I think it's really the demand out there seems to be outpacing the supply in the short term. That's why we saw pricing move upwards on a lot of those higher grade, newer devices or stay steady through the past couple of weeks. There has been a slight downturn over the past week or two, but I still think the demand is stronger than supply at this point.
Great. Well, I think that we'll wrap that up here. Thank you so much, Joe. Great job. Thanks to everyone who took the time to tune in today. If you have any additional questions, you can email me. My contact info is on the webinar invite, melissa@bstock.com, or you can always email our customer support team, cs@bstock.com. We're also going to plan to send a follow-up note to everyone with the presentation included. So we hope everyone takes care and stays well in the meantime, and we will catch you on the next webinar. Thanks so much.